Thanks very much, Paul, and thanks very much for organising the conference today. It's really good to be with you in person and speaking to everyone elsewhere around the country. This is our disclaimer. Just take care if you're reading the presentation that we may be making some forward-looking statements, and there's a disclaimer in there about those. A bit of the capital structure of the company. We've got just under 1.3 billion shares on issue. As of this morning, we were trading at about $1.15 and a market cap of 1.5 billion. We did a series of capital raisings this year, and we're sitting with just under $110 million in the bank at the end of the September quarter. And then we had a second tranche of just over 12 million come in after that capital raising that was subject to shareholder approval. On the right-hand side of that slide is our major shareholders, DGO Gold, followed by a series of international global gold funds and directors and management with approximately 3%. So just on to where the project is, the Mellina Gold Project, which hosts Hemi. The project's located just 60 kilometres south of Port Hedland in the Pilbara Craton. Same rocks, same age as the Yilgarn. Underexplored because in the early days of gold discovery in Western Australia, after gold was discovered in the Pilbara, people went down to Kalgoorlie and pretty much stayed there for the next 100 years in terms of gold exploration. Up until the Hemi discovery and possibly the conglomerate gold story, the general consensus was that there is no gold in the Pilbara. So the Hemi discoveries turned that on its head. The company has a tenement package that's approximately 150 kilometres long, and on that basis it represents what is a rare district-scale exploration and project development opportunity. As I mentioned, Hemi's a transformational discovery. The reason for that is that it represents a large-scale, near-surface, continuous gold-grade discovery. It's located near world-class infrastructure, which I'll discuss a little bit later. And our immediate growth strategy involves growing that discovery to a bigger scale and also discovering more of the same. So just on to Hemi. This is a plan view of Hemi as it stands. There are 4 zones there: Aquila, Brolga, Crow, and the recently discovered Falcon zone. As I mentioned at Diggers and Dealers, up until about 8 weeks ago, we didn't know that Falcon existed. It's only around 500 metres to the west of Brolga, and we know we've got really good mineralisation there for at least 1 kilometre of strike, with intersections, anywhere between 50 to 60 metres in length. So to be able to find that after the initial discovery at Brolga back in December last year, in such a recent time frame, just gives you an idea of the potential out here. That slide says we've got 6 rigs on site. We've actually got 7 at the moment and an 8th to turn up in the middle of November. So the idea for us over the next 12 months is to not only grow Hemi, and that deposit is still open. We're seeing some interesting sniffs to the east of Brolga, out towards Scooby. We've been extending Crow to the west. We've also got some air core drilling that's underway a little bit further to that outline of Crow, which is showing some interesting results, and we'll be trying to put that package together to follow up with some RC drilling. And as I discussed, we only just recently found Falcon. So that's at Hemi itself. We're also doing infill drilling there because we aim to put out a maiden resource in the middle of 2021. And we want to make sure that resource has got a high level of confidence when we put it out to the market. So we'll be looking at putting mineralisation, a fair whack of it, into the indicated category. The other thing that's been interesting that you'll have noted from some of the Crow announcements is that we regarded Crow up until probably, again, 8 or 10 weeks ago as a relatively lower grade version of Brolga. We started doing some infill drilling and started to see some really high grade loads within Crow, and that changed our thinking in the markets, thinking about that zone. So that's been a really positive aspect of doing infill drilling, which generally doesn't necessarily result in positive outcomes when you're trying to define a resource. People are mostly just interested in extending the zone. So what are we doing to find more of the same? This is the greater Hemi area, approximately 15 kilometres long. We've got 2 air core rigs on site as one of the composition of drill rigs, along with 3 RC rigs, 2 diamond rigs and another diamond rig to turn up this month. But we've had one of those air core rigs extending Hemi. It found Falcon, and we've had another one going around that greater Hemi area at Scooby, Shaggy and Antwerp, currently operating at Electronis. What we're doing with that air core rig is matching that up with geochemistry, geophysics, plus what we're getting out of the drilling. And our aim is to define some really solid targets to go after with one of those 3 RC rigs in this financial year, and look to find more of the same of what we've got at Hemi. On a regional scale, this is a plan with geophysics on it, with the EM of the tenement package up there, 150 kilometres long. You may just be able to see some pink shapes within that package. They are potential or known intrusion style deposits similar to Hemi, and bearing in mind that until we actually drilled Hemi, Hemi was another one of those pink shapes up until around about December last year. So don't write them off. We're very excited by them, and the market should be as well. The other deposits that are shown there are shear-hosted, and those shear-hosted deposits comprise the current 2.2 million ounce resource. We intend to extend that resource base as well, and in any production scenario at Hemi, those regional deposits will contribute to that production. And that's the next slide. You can see the scale of those shear-hosted and intrusion-style deposits. Tawarana, up until a couple of years ago, did not have a resource at all. That was an intrusion-style deposit, a sanucatoid, which really put the geos onto the intrusion style of deposit in the region. There was nothing there until 2 years ago. The guys had another look at it, started drilling it out. There's over 500,000 ounces there, and it's still open at depth, and we do have similar targets in that vicinity. Okay, the other thing we're doing is de-risking studies, project studies, and that involves long lead time, relatively low cost studies into environmental management, identifying infrastructure corridors, and also metallurgical test work. We announced in the middle of this year the results of some of that metallurgical test work. We got very high recoveries from a combination of gravity gold, CIL, but also sulfide flotation and oxidation test work. We're continuing with that test work to test each of the zones at Hemi and each of the regional deposits, and we're also testing different styles of oxidation processes. What's been really encouraging is that we've been getting really high recoveries into a low mass concentrate, which will reduce the size and operating cost of any oxidation process that we need for Hemi and the regional deposits. Just talking about infrastructure, the location of Hemi and our regional tenement package is what sets this project aside from other recently developed large-scale projects in Western Australia. 60 kilometres south of Port Hedland, we've got highways, gas pipelines, transmission lines nearby, replenishable water supply. So this is a really standout aspect of the project, and we believe that the location relative to this first-class infrastructure will help offset some of the capital costs associated with oxidation. Okay, so just to summarise the strategy before I get into a couple of slides that show you the quality of this asset. Clearly what we're looking at doing is growing what we've found at Hemi, defining a high quality resource there this financial year. We're looking for Hemi lookalikes in the greater Hemi area, and also on a regional scale within that 150 kilometre long package. And we're also looking at extending the existing regional resource space and looking for more shear-hosted discoveries. The aim this financial year is to demonstrate a Tier 1 production potential at Hemi. We're defining Tier 1 as a minimum of 10 years and 300,000 ounces a year. So let's get into some of the slides, some of the deposits. This is Brolga, and Brolga is noted for its widths, its continuous grade and location near surface. So we've got intervals there in excess of 60 metres, between 1.5 and 2.5 grams and close to surface, which is quite exceptional for the Pilbara, let alone anywhere else. And this is what makes the ounces at Hemi so valuable, and this is why we're looking for more of the same of these intrusion-style deposits. The ounces per vertical metre there are very high. You can imagine with that shape that we're looking at relatively low strip ratio open pittable resource. So I'm just going to flick through a few examples of what we've got out here. The next one's Aquila, slightly higher grade than Brolga. Currently we've got mineralisation down to 400 metres and open at depth. And you can see with the colour scheme there that it's a very high gold endowment in terms of gram metres. So I think the purple there is greater than 50 gram metres, which is exceptional. Now this is a cross-section through 30,000 East, and Aquila's just sitting over there on the left-hand side, and you can see some of the intervals and grades on that section. Aquila and Crow are relatively far apart in that part of the world, which is in the western part of Aquila and Crow. Aquila looks a little bit skinny there relative to the scale of the mineralised system, but you can see the quality of the thickness of those intervals and the grades and close to surface, and also the mineralised system is extensive and open at depth. I'll go further to the east now at Aquila and Crow. I've got a section there where the two zones become closer together. Again, you're sitting there with Aquila at just over 60 metres, over a gram, close to surface. Crow next door to it. Up until recently, we thought, as I said, Crow was the poor relation to Brolga. Not so. So within Crow, we've got an interval there of 5 metres at 73, sitting underneath a nice wide medium grade interval. Again, another one at Crow, and this really was the interval that turned our thinking on its head there, with 60 odd metres at 13. So, just amazing. And within that, there's much higher grade. And this is really what changed our thinking around Crow, sitting right next door to Aquila. Okay, so Falcon. Mentioned that Falcon we didn't know about until around 8 weeks ago. We were just following our noses to the west on Aquila and intersected some mineralisation that in air core that looked like it was going in a slightly different direction. It was at that point in time that we realised it was a different zone, but we were quite encouraged by it because the mineralisation looked quite similar to Aquila. And again, some really great intervals there, over 50 metres at 2, 90 metres at 1.3, 50 metres at 1.5 and over 60 at 1.1. So that was just sitting there 500 metres west of Brolga. And again, the purple's greater than 50 gram metres, and the first 800 metres to a kilometre is showing really high gold endowment. Here's another example of what we're looking at Falcon, and you can see why we think it's similar in some ways to Aquila, with that interval at 40 odd metres at over 5 grams there near surface. Another one at Aquila. This one is a little bit further south of the previous section. Again, 50 metres at 3.3, just sitting there right under the transported cover. And it's that transported cover is the reason why this deposit wasn't found previously until we applied some more modern exploration techniques and a bit more geochemistry and science to it. Okay, so I'll just finish up now. Just wanted to point out what our strategy is coming up this financial year. Wanted to go through some of the quality around Hemi, why people are valuing it so highly. I hope you've been able to see that. And our strategy over the next 12 months is to demonstrate a Tier 1 potential production outcome here. Obviously, we want to continue to grow the resource space at what is going to be well under the industry average of $20 an ounce. As the previous speaker mentioned, in terms of Red 5, we are also building our organisational capability in line with what we have to do and also the scale of the market cap of the company. And we're doing that in a transformational sense as we speak, and we'll continue to do that and announce senior appointments over the next few months. Our objective at Hemi is to become a Tier 1 gold producer. We believe that the greatest value for shareholders that we can deliver is for De Grey to maintain control of that asset and take it in through to production. And we understand that there's a potential during that process for the typical flattening of the share price curve on that path, but we are absolutely committed and we are well funded to continuing drilling at Hemi, around Hemi and on a regional scale to continue to make new discoveries and increase the resource base during that process. So we don't want to see that lag occurring, and we've got a regional scale tenement package, a district scale tenement package to be able to do that. So thank you for your attention.
Glenn, we do have a couple of quick questions. Quick questions and quick answers. One shareholder has asked, given the amount of drilling that you've done at Hemi, why haven't you published a resource estimate?
Yeah, sure. Well, the reason for that is because we haven't found it to be appropriate because we've kept finding new zones and we've also kept expanding the zones that we had found. So if we put a resource out, for instance, just at Brolga, which was the first zone that was discovered, it wouldn't have included Aquila. It wouldn't have included what we've discovered in terms of high grade at Crow, and it certainly wouldn't have included Falcon. So, we realise that we just can't keep going drilling forever, that we will have to put out a resource. So we've given ourselves a time frame of mid-2021 to do that, at which time, we'll have established a reasonable scale at Hemi, but we also believe that even then there'll be more upside.
And just one quick second question. Given the size of what you've got on your hands here, would you consider bringing in a joint venture partner?
No, as I mentioned previously, we've done a lot of modelling on this, financial modelling, looked at a lot of case studies, and from what we've seen, the greatest value for shareholders is for us to maintain control of the asset, bring it into production, but also at the same time to make sure we're sufficiently well funded to keep finding more of the same.
Thanks very much, Glenn.
Cheers.